And it is the last trading day of the week for 9/20/20 as we're heading into long holiday weekend, including Easter Sunday and Good Friday tomorrow. Welcome out to the halftime report here from tackletrading.com. We've got Friday Frank here on a Thursday, Frank, because markets aren't open tomorrow. Welcome, my friend. How are you doing?
Hey, great to be here. It's Friday enough. It's Friday enough for me.
It feels like Friday. Sure.
It does feel like Friday, although these 4 day market weeks are always they confuse me. I'm a creature of habit and routine. So you throw me off, I don't know what I'm going to do tomorrow.
Sure.
But great to be here. Hope everyone's doing well.
Always great to have you, my friend. I think Frank might be the most popular coach in our community, Mark. You know, Frank doesn't like me saying that. He's always going to defer to like Cody or somebody else. Frank, who do you think is the most popular? If you took second.
Well, I don't think I'd be second. I think you got Gino would be my number one. And then probably Noah would come in at number 2 with you at 3. I'd be putting myself, way down towards the bottom of the list.
Mark's wondering where he's at on that list. I think people who love Mark, including myself. Mark,
I don't care to be loved. I just care to be right.
I know.
There you go.
and if you don't love the coach that's right all of the fucking sorry. all of the time.
And that's why you might not love Mark.
Right. So
earmuffs, I guess we could do there.
Cody. Well, it's hard because we talk a certain way before we go live, and then we talk a certain way after we go live. I got caught in a little transitionary moment there.
No problem. We'll move past it. We're not going to just dig into it. Cody, how are you doing today, young man? I know that you're playing morning dad there, obviously all day dad, but you've got the morning shift, I believe. Is that right?
Yep, I got the morning shift with Liam, and he's chilling here in my lap. He doesn't want to be set down. He's getting fussy, but he's already eaten. So I think he just wants to sit here and watch me trade, watch me do the halftime report.
Sure. Yeah.
Which actually, I got to thank Marie. She gave him a little onesie, and I'll see if I can pick him up without him getting fussy on it. That says CBMA in training.
Dude, I love that. That's very cool.
Awesome.
I mean, dude, first of all, having your boy on your lap there for years, I mean, he's going to learn charting early on. I always talk about pattern recognition. My daughter, who has no interest in the markets, I have 3 daughters, none of them do. But my youngest, Maddie, she can read a chart. She can tell you where the entry is and the trend and all that kind of stuff. Because when she was that age, Cody, and even up until she was like 3 or 4, she'd come sit on dad's lap a lot. So you're giving me the feels over here on a Thursday, Cody. There's no doubt.
There you go. You could make the argument that you and Cody are both.
Go ahead, Frank.
You and Cody could make the argument you're both training your own replacements as well.
Yep, that's right. I mean, that is what kids are, right? I mean, get these kids up and running so they can trade for us. No doubt about it. All right, let's break down the markets here. We've been talking about it all week, guys. The market wanted 2,800. Well, now it has it. From here, we will have to break down all the analysis and talk about what's next. There's no question about it. Let's start with the chart itself. And actually, Frank, you had some pretty good points. And Cody, kind of navigate around for Frank as he's talking here. Frank, you've been calling this a pretty clean technical market all week. What are you seeing in this chart?
It's going to help if we go to the hourly, Cody, because this has been a very well-behaved week. I think at least it's been very well-behaved. As we came into last week, as we're wrapping up last week, we're hanging at support, right? We built that little floor. We were talking about that floor, from last week, breaking that as a kind of continuation of the retracement. Obviously, we didn't get that. So we end up holding that support. Where's our opening here, Cody? Just so I'm looking at the right place. There you go. So there's our floor as we end the week, right where Cody's got his little highlight there. So we tested that all week, right? I mean, we drew our line in the sand, at least from a technical point of view. It felt okay. If this breaks, that's where we see another move to the downside, right? That doesn't happen early this week, right after our futures open, we end up breaking resistance. So that's right where Cody, can you kind of zoom down just a little bit to our first breakout of the week? Down about 25.40.
On.
I'm looking at you too. I'm a little delayed. Sorry. So I was looking at I was like, okay, there you go. Yeah, there we go. No, back up just a little bit, Cody, to just right above where your 50 MA is there.
Okay. You want to talk about this?
So I want to talk right off of our open. So we break out of resistance, right? And that is everybody who knows me, you know how I feel about breaking resistance, right? That's pretty consistent. Well, where was the next stop? Once we pushed through that resistance, was there any technical reason not to push those highs from last week? I'm asking. I didn't see one. I don't know if anybody.
No, I mean, there was clear error, as a
Yeah,
day
I mean,
trader, even, you're going to see that chart and you're going to be buying on the dips, buying on the moving average test, buying on the retest, all that kind of stuff. That's the thing why we've been talking about it. I believe in the fundamental cautious bear argument. I don't think the world's going to end. I had a dear friend of mine actually text me last night. I used to umpire baseball games with down in Cedar City, Frank. I was talking about Cedar with you before the show. We went to college there. And he said, Tim, do you think we're going into a depression? And this is not a trader. He doesn't watch the markets. He's not in the halftime report every day. And I instantly said, no. I mean, listen, the world will be fine after whatever period is. I'm just very, very cautious about the economic fallout of all this stuff. And obviously, by the way, even the Fed is and everybody else, that's why they're taking such drastic action right now.
Sure.
You know what I mean? But from a charting perspective, the bulls have been in charge all week.
They've been in charge. We break
Mark
resistance.
nailed this early.
Yeah.
Mark, you identified this bull momentum early in the week, and they've literally just been running it. The chart's been clean, Frank, to answer your question. Absolutely.
Absolutely. Breakout, pull back to the breakout point, big run, pull back to the breakout point, consolidate, break the resistance level, back to resistance, another break. This is sure it's been on the hourly time frame, right? But it's felt like my favorite kind of market. You know me, I love when things break and have space. That's always my favorite type of trading scenario. Break a level of support or resistance, don't have anything in the way for a little while, and let me work to that and reevaluate.
Yeah. I mean, if you even go from a technical standpoint to the daily chart, go back to the daily chart. I mean, you look at how it responded to the 20-day moving average technicals, this market right now, fundamentals don't matter. It is a technical and sentiment driven market. And changing your colors up on me, are you?
Yeah, Monday was a good day. We broke resistance. We closed above the 20, created a higher low.
And once again, it's this technical concept that I've talked about a lot in the last couple of weeks of clear error, of moving average pockets. So on a daily chart, I mean, what do you have here? You have comes up to the 20-day moving average resistance, comes up to the 20-day moving average resistance. Like from a moving average study, you would expect it to do. And then once you break, you have this huge moving average to the upside. Now, once you enter a moving average pocket where there is not resistance, or same thing applies to support, it all becomes about sentiment, right? It all becomes about sentiment. Like, where's the sentiment? And that's what we've been talking about all week, is where's the sentiment been this week? It's been with the bulls. Now, one could say it shouldn't be. One could say it should be. It doesn't matter what you think. It matters what it is. And right now, the bulls, based on whatever, they just do not believe that the coronavirus is a situation that will last. And they do believe that whatever the economic damage is, the federal government and Fed will offset it. And so with the bears, I mean, what have been the new headlines to spook bulls this week?
Nothing, because economic headlines aren't going to affect them. It's not in the narrative of what they believe.
It's not in the narrative of what they believe. So in absence something saying altering their belief system, because let's be honest, and it was a stat I shared at the first of the week. It was one of the most fascinating stats there are. More people expect the market to be up a year from now than at any time in the history of the survey being taken. Yep. When you have mass belief that the market's going to be up a year from now, and then you get a technical situation where there's nothing to contain it, that's a pretty powerful 1-2 punch for price movement in that direction. And that's what you've seen play out this week. Now, we can talk about the ramifications, what should you do, but understanding why price is behaving a certain way is really, really powerful. Really, really powerful to understand what is happening in the market this week.
Let's talk about the virus for just a second. I do want to get your take on this. Data has not been good this week. There is not an indication we are flattening this curve at this point. There's a lot of good positive things happening, like with Mylan and Medtronic that we're going to talk about, some drugs that are coming out, some medical devices that are coming out, and there is hope that we're going to be able to contain it. But I did read today, we had the biggest one-day increase all week, in terms of cases reported. We also had the death count in Spain go up. Why does the market not care about the virus data anymore, Mark? Why are they ignoring it?
Because once again, and we've talked, I talked about this in this really, really long article. I've talked about it several times. The bull thesis is very simple. It is a very, very simple thesis. It is, yes, there's going to be damage. Eventually, we are going to contain the virus. And in between, federal stimulus will flow in one form or another to stabilize the economy. Now, so the virus day-to-day totals, sure, they'll use them as anytime they get an excuse, right? On Sunday night on futures. Oh, virus data looks somewhat good. We've seen this a couple times in the last couple of weeks. They'll use that as an excuse to fuel their narrative. But then when it's bad, they want their cake and eat it too.
Well, and they're getting it this week, Frank. I mean,
That's
bullish move.
When virus data is good, it's like, hey, see, look. I mean, I saw some blog writer. I've dived into sentiment, like, because I want to know what market participants, because once again, if I understand price action, that can help me make good decisions. That doesn't mean I'm buying today, and we can get into that in a few minutes, but it helps me understand what's going on. Like, I read this blog article, and it was amazing. Every stock market analyst, every blog writer has suddenly become an expert epidemiologist. This blog writer was saying, yeah, according to my models, we're going to have this virus totally contained and go away by May, earliest of June. All right, like, because once again, they want to say things that fuel their overall belief. So they'll just make up stuff. They'll just absolutely make up stuff. But there's a lot of these people, like a ton. They represent the overwhelming majority of market participants. Your average Joe investor, buy and hold, their basic argument is, hey, the fundamentals of the economy were strong, and the stimulus package is going to work. And
but back out to weekly while we talk about this. Sorry, Mark. Back out to weekly, because if we're going to talk investing, we got to do the fundamental argument is an important one. I believe in it 100%. You have to examine it. You have to think about it. The way that you approach trading is different than the way that you approach investing. Mark, they are separate things. There's no question. A trader like Frank, moving on average pocket breaks out. Who cares what the data is? You trade the chart, right?
Well, exactly. I was going to say, Mark's a very interesting take by Mark, but if you go back to the daily chart, we had a big bullish candle on Monday. We've created a higher low. We created a higher high, the definition of an upward trend. We've established bullish momentum. Why that is? Well, Mark's probably got a better idea of that than I do, but that it is, well, I have the same idea that he does, right? And that's why I always turn to the charts, because I'm wrong plenty. I don't, I know plenty of things and not know other things. I'm always, I'll always let you know in hindsight. But we created that higher. I mean, this is one of the reasons I hate deeper retracements. Everybody here knows that. You get those deeper retracements, and they're just, they have the opportunity for the other side to kind of come back in and say, yeah, you know what, you had your chance, right? But the bottom line is we created a higher low. We close above the 20, we create a higher high. Any textbook, short-term speaking, long-term, we could make different cases, but short-term, that's the characteristics of an upward trend, is it not?
Yeah, no, so absolutely. Higher low,
if
you
this
a higher pivot high.
If this
it hasn't confirmed a second higher.
But here's the problem.
Yeah, it hasn't confirmed yet. It's probably going to get to that 50-period moving average right around 2,900. We called 28 on Tuesday, I believe it was.
We did call that on Tuesday. It feels like it wants 29. I'm concerned about the fib level, though, Mark. You talked about.
Well, I mean, here's the problem with
Tim's bringing up fibs now.
Here's the problem with the technical. It's an uptrend, because from a classic technical situation, that would say, right, what, buy. You're in a trend. You should now pivot to bullishness. And I believe that is terribly dangerous right now for a lot of different ways people trade.
And this is because, and in my opinion, is why I wanted to bring up multiple time frame analysis. We always, as traders, guys, and investors, we bounce around between weeklies and dailies and hourlies all the time. Every time we're analyzing something, go back to the weekly if you can here, Cody. I appreciate you running the screen here today as we're moving you around. You don't have as much clarity here. Now you've got a pocket here, guys, all the way up to about 3,000 on the S&P now. You're above the 200 weekly, below the 50 weekly. You're below some pivot points. If you back that out a little bit as well, Cody, there's all kinds of things that could happen here in the next couple of weeks. Mark, what's your view on the big picture here?
Like big picture, like on what? Okay, well, big picture, like coronavirus, we're likely to see a eastward trek. I mean, this is the thing about the coronavirus, right? Is that even after you flatten the curve, how far do you travel eastwardly? You got north, south, west, east. And so, you're heading north, you peak. How long do you travel easterly? How many days, how many weeks, how many months after you have successfully stopped the exponential growth, do you still have hundreds and hundreds and hundreds of deaths in a country, or hundreds and hundreds of deaths in a city? Like, how far that travels east is the great unknown, because it appears that Spain has peaked, but they're still recording, the same levels of death traveling easterly. How does a society reopen? What are the parameters in which economic activity starts to get going? I mean, this is the great unknown from the coronavirus. The economic fallout, well, my goodness gracious. I mean, this is where I get into the bearish argument the higher the market goes. Because the Fed government stimulus will succeed, this has been my stance all along, at stabilizing. This is why I've always put myself in the moderate bull camp, is that I do believe we beat the virus one day. I do believe that that economic stability is created on some level. But what a bull right now that buys, what they're saying is, I'm going to front run that, and I'm going to front run that. I'm going to push prices up to these levels.
I agree with that, Mark, but hasn't a savvy bull, I mean, they bought Monday on the break, right? They're not buying, I mean, because right now, forget about, just purely technical. If I buy right now, I have to be willing to sit through a retracement. I absolutely have to. I'm a little bit extended to the upside on that short-term time frame, right? So if I buy today and it goes down Monday, that means I can't really make much out of that.
Which the reward to risk throws off.
Exactly.
Define savvy bull. This is the argument I get into Tim with all the time, when we're just talking one-on-one. What kind of bull? Like a trader?
A swing trader. Yeah, a trader.
A trader should just be trading. Yeah,
investors, this is, as I was telling Lewis in the chat, I'm coming at this purely from a trading perspective.
And I'm primarily coming at this from an investing standpoint.
Understandable.
So like,
and I would agree with your thesis, and I think there's a lot of risk to the downside, whether we hit it or not. I don't know, but I think there is substantial. I think the risk is worth, hey, if it does come lower, I get lower prices, then I miss out. If I miss out, well, I'm doing all right as a trader, rolling with the trend is kind of the philosophy that I take.
So even if you believe in S&P 3000, though, as a trader, Frank, I mean, what you're talking about is you're at 2,800 now, 200 points to the upside versus, I mean, at least even the most aggressive bull would have to admit you have at least 200 points risk to the downside, back to 2,600 to retest.
Oh,
right?
Absolutely. And so, just pure going pivot relationship, I mean, your stops below 24, that's a lot of risk for a very moderate reward. So I'd be thinking from a swing perspective, I'd be thinking, okay, I'm either in the break, which is good for me, or I'm not in the break. I'm waiting for a retracement so I can create that higher low. So I have new placement for my stop loss on the next swing to the upside, right? And so I don't have to get to 3,000 in that scenario to have a good risk to reward. If I were to get a little red candle Monday, little red candle Tuesday, a doji on Wednesday, upward movement on Thursday, my risk to reward looks a heck of a lot better, right? So that's where we have to kind of think ahead. And I guess from a savvy perspective, Mark, that's kind of what I'm thinking. If the breakout trader's already in, I mean, I don't understand how they're not. If you're trading,
they have to be.
You were in on, aggressively on Monday, more conservatively on Tuesday. I mean, is today I'm conservative, but goodness gracious, I'm not that conservative, right? And so that's kind of the perspective that I'm coming at it from, is really from the trading side and not the investing side at all.
and I'll push back even further here. If you look at the charts this week, like swing trading for me is the most dangerous form of trading right now.
Agreed.
Every run this week, all of this bullish run, you could have caught on the upside day trading with
Oh, absolutely. Yeah,
pretty
it's
decent
absolutely.
signals, especially when you use moving averages. Breakout signals from a classical standpoint have also been really, really solid. When we've seen the market clear moving averages to the upside, we've seen pretty decent runs. When we've seen breakout levels, especially when they've tested. I mean, look at that one that occurred on Monday.
That's what the guy.
Yeah, that's the aggressive one he was just pointing out, is at
But-
that break right there,
Like-
and then it ran.
And so, like, whether you are almost any system to the upside, you would have seen signals. You would have seen
Absolutely.
signals to capture a great chunk of this move. And so, like, if you are in that bullish camp and like I'm looking to do bullish trades, boy, you're capturing a large percentage of the moves in day trading without that overnight risk, without that news risk, without that, all of that. Like, you know, like if you're just the buy and hold swing trader that, hey, I'm going to place a trade and then I'm going to manage it with a stop loss.
Well, you're seeing too many overnight gaps. I don't think you can responsibly do that unless you're playing, things like, cheap spreads, in which case, sure, makes sense to go that route. I agree with that, Mark. I think that this is still a day trader's market, but I think it's starting to look more like a swing trader's market. But until we stop gapping 3% on the open all the time, I mean, that's going to remain very difficult from a swing point.
And go down to a 5-minute chart on that here, Cody, because even like this morning, I mean, we're talking about the momentum. And by the way, the market is breaking out on the intraday, even as we speak right now. A little
Look
high
at that
base,
breakout right there.
A little breakout, Frank. I mean, we bring you on, Frank, and we're going to get a breakout.
We're breaking
signal.
out.
This morning, guys, actually, the market looked like it was going to open up weak, before early. In fact, overnight action, the markets were selling back into the 2,700 level. It then started to pick up when the European markets opened. You had some data come out. The UK, Bank of England, they came out and said, we're going to backstop the economy with their programs, things like that. But then even Jerome Powell and the Fed actions today were incredible. We had unemployment claims again here today, Mark, and explain this one to me. And
I can already explain it. Don't you know that this is 3 straight weeks where there have been bullish rallies on unemployment claims? It is the new bullish rally economic report. Doesn't matter what it is.
Your new favorite signal.
3 for 3. Just trade bullish on the unemployment report. Because, I mean, you think about the psychology of it too. Let's say you're a bear and that first week you saw these big, huge numbers, but then you got smacked in the face. And then it happened again. You expected that to happen. Who didn't expect the market to rally on unemployment claims, no matter how terrible they were? Because there's been this, like, it's happened. Listen, you flip a coin. It's an old gambling adage. Like old gambling thing. People will be like, flip a coin once, heads, comes up heads again. The gambler's like, I'm betting on heads again. Well, I know statistically that can come up 50-50, right? That's what
yeah.
But the gambler's like, I'm betting on heads again, like, and that's what you've seen 3 for 3 on unemployment claims. But also, I mean, this is how beautifully, going off what Frank said, from a technical, this market has been so technically well behaved recently. I mean, just look at the pullback today. What did it come down to? That old pivot high, that old pivot high,
tested the breakout,
old support, test back, new old resistance, new support. I mean, these are all classical, like, the bulls have been in charge all freaking week, and the technical bull stabilities on charts have been pretty pronounced.
It's been very strong technically for the bulls on the shorter time frames, for sure.
Mark, in your thesis as a bull, I mean, at least a moderate bull, cautious bull, doesn't mean new entries here. From an investor perspective, do you think it's better to approach the broad markets, ETFs, indexes, or are you looking at distressed companies? I mean, it's one thing to make a bull argument, a moderate bull argument, a cautious argument, whatever that might be. But do you approach it from the big picture, or do you then go down to individual components?
Okay, so I am in the moderate, I'm self-proclaimed moderate bull. All right. All of the trade ideas I've had, all the trades have been bullish type trades. Now, they've been naked puts primarily. And, all of those, it's one of those things. When they all expire worthless and the market's rip roaring, you're like, I'm losing money, even though you're literally
It's
having
easy. It's yeah.
every trade that idea I have given out for the last 2-3 weeks has been 100% winning record. Another reason you should become a pro member, but it still feels like I'm losing money. Like,
You always have to remember, Mark, your first goal is to make money and the second's to make more. It's easy to.
I love that. I say it in a more sophisticated way, but that is a better way of saying it. Say that again, Frank. I love that.
Your first goal is to make money, and then your second goal is to make more.
Yeah.
So many times as traders, we kind of want to skip number one and go straight to more, right?
And Frank, this is why you're more popular than me, because the way I say that is I give this very detailed argument on cost basis and philosophy. And Frank, you just say it how it is. First goal to make money, second to make more. But like, as a moderate bull, like, this belief in the Fed, and more importantly, this belief in the market's response to the Fed, has helped dictate my actions. I buy into that. Have said that for weeks and weeks and weeks now. I buy into that argument. I also buy into that we will be the coronavirus. Now, the reason I'm a cautious bull in this is a really long game. I know in a week like this, in the weeks we've had, everything feels so fast and that everything's just here. This is a very, very long game. Day trading, if you need the action. If you want to be a hyper short swing trader, God bless. But this is, from an investing standpoint, a really long game. If you don't think it's a long game, then you are ignoring everything that we know about the coronavirus. The coronavirus is highly contagious, and unless a huge percentage of the population already has it and we are asymptomatic, if we are immune to it, not immune is the right word, if we're developing antibodies on this huge massive level, that's the only way that the ultra bulls are right today. But this is a long game. This is a long game from a coronavirus standpoint. China right now, there are so many reports that China is experiencing a potential second wave.
Well, I think China's been having the same wave. They just haven't been telling us about it.
They probably just have been disinforming us for a long time.
Yeah, it's crazy that they went from, being the most infectious to all of a sudden 0 deaths or 0 new cases. It was like, what?
You literally can never believe anything China ever says again. Like, this whole incident has taught us that you just can't believe what they say as far as from official standpoint. But like the ultra bulls, a huge segment of the ultra bulls don't believe the virus is a big deal. That's just the reality. Go to your Facebook posts, go to message boards. A huge segment of our population think this is an overblown.
Can I get on a hippie soapbox for 1 second though? Because something you said just triggered me.
It's officially Friday, so yes.
Sure.
Fun day.
Real quick. It's one thing, and I've been very critical of China. It's one thing to absolutely 100% say I do not trust data or information out of the Chinese government and their regime and what they're doing. I mean, you can't trust it. I have been seeing this recently though, Mark, and I'm very concerned about it in society. Guys, we're human. Do not let that transfer to xenophobia and fear of Chinese people and all of that kind of stuff.
No, this has nothing to do with the people itself. No, it has to do with the communist government.
It has to do with
criticizing you guys. I promise you.
No, it's the communist government that's lying to us, and that has nothing to do with their ethnicity. It could be a communist out of any other country that's lying about the data, hiding it, giving that's actual false hope. That's actually lying. Like, the way that they let it spread to the point to where it's seeded across the globe was because they lied about it in the first place. And they didn't learn their lesson. They're lying about it again.
Tim, what you said isn't a hippie argument, is a human argument.
That's right. I know.
Because anyone who is denigrating individual human beings, no matter what their ethnic, race, background, just never watch us again. Unsubscribe from our pro membership. We don't want you part of the community. I don't care. I don't want money from individuals who are going to bash Chinese citizens, bash Chinese, Asian Americans. We are a human collective. Species collective, whatever it is. But governments, well, they can all go to hell. you know, because governments
and central banks, by the way, which I'm going to get into here in just a minute, but go ahead.
But no,
Finish
but
your
no, but getting back to the coronavirus thing, and so you have a huge segment of the population that doesn't believe, and I believe this plays into the bullish sentiment, right? Like when you analyze why is sentiment so bullish right now, you have a huge segment of the population that believes this is at worst just an overblown conspiracy, no big deal, just the flu. At best, is going to be resolved in a very short time. Nothing we know about the coronavirus would support those. Nothing, absolutely nothing about that, which is why on the coronavirus 10, 12 weeks ago at Tackle Trading, we were saying, this is serious. This has an impact on markets. This has an impact on
talking
society.
about it before it even spread outside of China. We were talking about it.
And now we are months and months later, and nothing we have seen refutes those initial worries. The coronavirus, and once again, the only bullish thing are things that on this hypothetical antibodies, herd immunity is already being developed. We have zero idea. That is pure speculation. And so the coronavirus is a real thing. And if there is societal risk to opening up early, that we are just constantly being drugged by this. There's societal risk to the coronavirus if we completely disregard social distancing norms. So from the bearish side, and there is huge, massive economic risk to not only the United States, but the entire globalized economy. And so this long game, even as a moderate bull, and once again, I'm talking from an investing standpoint. Trading is why we say on day trading, leave your bias at the door. It's why we say on, as Frank was talking adeptly on the swing trading, there's technical momentum is a real thing. Technical signals is a real thing. And I think we can trust technical analysis a lot more. We've been saying it for weeks on the intraday chart. Boy, that daily chart, whether it's fib levels, whether it's support and resistance levels, whether it is how it reacted to the 20-day moving average, how it acted in this pocket of clear air to the upside. I mean, technical analysis has been pretty much rocking, for weeks now on one level or another. But when you back out to an investor standpoint, realize this is a very long game. IMF, came out today and said the global economic fallout from the coronavirus will be worse since the Great Depression.
Yep, I saw that too.
Numerous banks have said, listen, this is a big freaking deal. Corporate earnings, economic data, all of that. This is a real issue. So why I place myself in the moderate bull camp, only willing to enter in through certain means, and I'll update those means because I'm more bullish than I was a week ago, and last week I was more bullish than the week before. That doesn't mean go in by today. It's the recognition that the coronavirus is serious. It's going to have an impact on how society interacts, spends, and it's going to have a huge economic impact. Now, I do believe the Fed and the government will stabilize and make this all good one day. Well, all good relative term, right? I do believe we beat the coronavirus as a species. I believe we win. I believe in modern medicine. I believe there's some really smart people out there working tirelessly to find the treatments, a vaccine, all of that. Big, huge believer. But to ignore in this long game we call investing, ignore that the coronavirus is real, to ignore that the economic fallout is going to be substantial, that to me is just outright foolish from an investing standpoint. Technical analysis and sentiment can help us explain price action, can help us make, even with that dire outlook, be bullish in any given time frame. But from an investing standpoint, this is a long game. This is a long game, and how we execute that game the last month, the coming year, will go a lot towards our financial destination in 2023, 2024. And if you just absolutely have to make a decision today, there are ways to do that cautiously. in my opinion.
Well, can't you just trade that? I mean, that's where you and I split on this a little bit here, because as a trader, I've been bullish this week, playing up and down. I was bearish when it was backfilling on Tuesday. I was bullish as a day trader. I'm still willing to take different situations and play them. But as an investor, Mark, I'm just cautious until I get more clarity. I mean, I'm not willing to come in and start using capital from the investing perspective, betting on a Federal Reserve action that is unprecedented, betting on this new QE version of
But
whatever it
once
is.
again, I'm not betting on it. Like, there are no stocks. There might be a few. Go to TWO, a ticker symbol I don't think we've ever brought up once in the.
You want the daily?
There are certain stocks. This is a mortgage REIT, right? And I'll get into this over the weekend. Banks, mortgage REITs. There are certain stocks that are certain signals that I'm going to be, for the first time, willing to buy outright. And I'll go into the whole thesis this weekend, but it's basically, if the Fed can solve your problem through monetary means, I become a lot more interested in acquiring shares at a certain level at a certain signal. It's a buy the dip, sell the rip that I haven't got to execute as much as I would like, because we haven't had any real dips, right? This has been like roaring market. Like, I'm really, really, really cautious in certain areas in buying anything outright today, because of all of the bearish arguments, Tim, that you could make right now. Make 5 bearish arguments for me.
Okay, we don't have clarity on the actual virus response or what's going to happen. There's a protest being staged in many major cities in Europe in 3 days, Mark, on Easter Sunday. And they've got a lot of people that are going to take to the streets and say no more lockdowns. I think you have civil, you have Federal Reserve actions. We cannot understand what the implication or the ramification is going to be. You have global economic slowdown at a level that would require the Fed not only just to take actions here in the US, but eventually take actions in emerging markets, flooding their markets with money that I don't know if they're willing to do. So even if we survive, which I believe we will, I'm concerned about the outcome of all of those things, because we just do not have
Tim is so
yet.
bearish that he isn't even willing to say that 100% we survive. He had to hedge that we would. He is so bearish that he even had to hedge that we might not even survive. Did you catch that, Frank?
Yeah.
I think we're going to survive. That's how bearish Tim is.
No, we're absolutely going to survive this.
All right, that's
We're
2
fine.
bearish arguments. I want to hear 2 more. 3 more.
Okay. Mark, there's an outcome from the economics of this that is going to play out over time, and over the short term. Wall Street and the euphoria of buying and trying to make money and turning the algos on and having this Wall Street greed come in and V-shaped rally, because they're making stacks of cash right now. I can't imagine how much money those algorithmic based traders on Wall Street are making over this sell-off and the run. But eventually they cannot just say bad news is good news. You cannot do that forever. And at some point, you have 16 million unemployed in the last 3 weeks. And that's not even the total unemployed. That's how many processed claims that they've had. So that 16 million unemployed actually converts to about 15% unemployment in the US today. The projections from every economist that I've read, that I trust, that is smart, even the Fed guys who think this thing will eventually be dealt with, they're all projecting 20 to 40% unemployment in the US. In the history of capitalism, firms do not hire people back right away. Firms are greedy. Firms are slow to bring back a workforce. And so all of these Fed programs and all of this monetary policy and all this money creation, it might be held by firms. It may not get to people. And so you have a crisis with the consumer. The Michigan Sentiment Consumer Confidence Report came out today, and it was down 18 points at the lowest level in the biggest drop we've ever seen. By the way, at 71, that's amazing to me to think about. By the way, it should be lower next month, I'm guessing. Economics are going to fill in slowly through the consumer, and there will be a real world economic impact. And if people revolt and don't take the shutdown seriously, and governments reopen quicker than they can, you have a second wave of fear in the summer or the fall, which then ends up crushing the restaurants and the airlines again. And what, more Fed action is just going to save it? Yeah, there's your other arguments.
All right, now Cody, make one bearish argument.
Such a nice time, Frank.
No,
Go ahead.
It's
Cody,
always fun.
What is Cody? What is the bearish argument that resonates with you? the most?
Bearish argument that resonates with me is that the economy gets opened too quickly, and we see the flattening stop, and then we see another exponential spike, and then the market will have to be halted pretty quickly. And at that point, where people are starting to go back to work, and then all of a sudden they're not, and we've already thrown all the stimulus out at once, that the market's going to take a larger drop a lot faster than it did this time.
And what we know about the coronavirus, right, is very contagious, and that could easily happen, right? Frank, now from a technical situation, what's the, like in the coming weeks, like from a technical, what would be a situation that would trigger a technical larger sell-off from just a pure technical standpoint in the coming weeks?
It'll depend on the time frame you want to work with, but I mean, the thing that's staring us right in the face right now is that falling 50, right? That falling 50 MA should present a legitimate challenge. You know, that should present a, hey, if I'm, you know, in as a trader, yeah, I probably should take some profits if I still have some to take, right? At that scenario. So that could be a legitimate place. If we were to consolidate a little bit, which hey, we saw some consolidation last week, so maybe it can happen again, right? If we consolidate and then turn over and break trend. So right now, Cody, if you would just draw a little trend line on, you know, connecting the two recent bottoms, you know, that would change potentially, right? With you know, going with some consolidation, but something along those lines that could almost turn into a little bit of a pinch mark, where we've got the trend line pushing to the upside, the 50 coming to the downside. And again, who knows how it would play out, but that could be a really interesting point in time from a purely price perspective, I would think.
All right, so I'm going to grant all of your arguments, because not even grant them like intellectually. I think they're all valid, right? I mean, and so like, once again, getting from an investor standpoint, like a naive investor right now, and once again, naive investors have been proven right for 11 straight years. Fighting the Fed. Fighting the Fed has always been a losing proposition, always, in 11 years, which is one of the reasons I'm a cautious bull, right? But I'll grant everything you say that could point, not just maybe, legitimate reasons from a technical standpoint, from a coronavirus standpoint, from Tim, that we're all going to die standpoint. That's the one I won't grant. You know,
Well, if we're all dead, it doesn't matter what the market does.
I need a T-shirt, Timmy the Bear. I need it now. It's got to happen. I need Timmy. The Bear.
Timmy the Bear. I would wear a Timmy the Bear T-shirt. In fact,
I would so rock a Timmy the Bear T-shirt.
In fact, I'm going to go find and I'm going to
tackle merchandise.
I am going to custom make us some Timmy the Bear T-shirts. You know, Timmy the Bear. All right. So, like, in this situation, how it plays out. Like when you invest, you get one shot, right? Like I have 100% of capital. With 10% of that capital, 5%, I get one shot, right? Because I'm not going to day trade that. I'm not going to swing trade that. I'm going to say with this 5% of my capital, I'm in. And if I just like sell at the first, you're not investing, you're trading, and that's a huge, dangerous combination. And so I only get in this long battle X amount of bullets, right? I only get, like, let's call it 20 bullets, 5%, or let's 2%. I get 50 bullets. So I have to be very, very careful if I believe. Now, once again, if I'm a naive bull, doesn't matter. Just buy, it will all take care of itself. I like to think that we can be a little more sophisticated than that at tackle trading. And so this is not a short-term movie. This is a movie that you could position yourself in for the next 10, 15, 20 years. Like the decisions you are. And if you are cautious, greedy on those entry levels, you only get so many bullets. Why are you going to fire them now in the midst of so much craziness? You should be careful. You should be selective. You should be greedy. You should be cautious with all of these arguments that are adeptly made by Tim, Frank, on even a short-term technical standpoint, and Cody. Like, and so being cautious, a cautious bull, a moderate bull, which is the phrase I use. Yes, your naked puts keep expiring worthless. Once again, worst problems to have, right? there are worse problems to have than what was you're saying again? Worry about making money now, worry about making more money later.
Yep.
This is very likely a long movie that we're watching from an investing standpoint with lots of chapters. A terrible movie, boring. Tiger King was much better. I started watching Ozark again. That is
I'm looking forward to it. I have to go back to the beginning because
oh my gosh,
I can't remember it well enough to start the season.
I did.
So.
I watched the first season many years ago and rewatched 3 episodes last night. Oh my gosh, so good. Just absolutely, I love Ozark. I'm so excited to have a show. But like this is a long production. You only have so many bullets. It just seems make a little bit of money if you're selling naked puts now, being careful, being judicious in how you're deploying that capital. And you could put yourself in a position where as a bull, you are really set up at cheap cost basis on your investments for this really long multi-year, multi-decade time frame until we get new information on something, take profits, blah, blah, blah. There's a way to approach this market right now that resonates with me. Now, if S&P just goes to 3,300, it does. That's insanity to me. But listen, markets can be irrational, right? Markets can be irrational. But being a cautious way of approaching this, I know it'd be nice if we could be making more money. But making money is the first step, making more money the second. I don't want to be a bag holder. I don't want to be a bag holder. A phrase, what's the definition of a bag holder, Frank?
You get stuck, right, Frank?
Yeah. Last one holding the bag that doesn't have anything in it. You don't want to be that.
Yep.
With all of this information we know about the coronavirus, with all of this information we know about the economic fallout, with so many dire theoretical arguments that can be made very soundly, I believe that there will be stability provided by the Fed. I believe there will be stability provided by the government. That doesn't mean euphoria, though. I will not be a bag holder at these rallies. I'm going to be cautious. I'm going to fire my bullets appropriately.
By the way, Coach Mark is going to be holding a special Mind of the Trader event here today, and just kind of want to make sure that everybody knows about that. We're launching that just kind of last minute here, Mark, because you wanted to communicate with the community and go through a lot of these theories with them, I believe. And we're going to go live here in an hour, I believe. 30 Mountain.
In an hour. Here's the thing. At the end, when do we make a lot of decisions, especially from a naked put standpoint? On things we might close it. In that hour and a half, before the week ends, there's a lot of things going through our minds. What should we do? How should we approach it? Should I close out a naked put? Should I enter a new naked put? Should I buy something outright? We got so many of those decisions. What are we doing before the weekend? And I know me as a trader, me as an investor, I have those same decisions. What should I do heading into the weekend? And so this Mind of a Trader is a before the market closes each week Mind of a Trader, that it is an open bring those decision making, share thoughts. What are we doing? Talk through them, because talking through things, I don't have Frank used to live in Salt Lake City, and I would just go over to Frank's house to have these type of discussions. Frank doesn't live in Salt Lake anymore, and I know as a trader, we have so many things that we're thinking about.
Yeah.
Because that's a huge decision point in the week, right? Before the market closes. Do I let it ride? Do I enter new positions? What am I doing? And so to have a forum where people can just discuss, what are we doing? What do you think? What should I do with USO? What should I do with gold? What should I do with this? Bring those ideas, Mind of a Trader. And if you're not a pro member, come sign up today, get a free trial, sit in, see if that, but I think it will make me a better trader, because having the ability to discuss things in a community,
saying things out loud really does help.
Oh my gosh.
It really does. Because in our own minds, we're always spot on, right?
Because I'm prone to do stupid things if I don't think through. And so having the ability to just put it out there in the universe, it helps me think, and it helps other traders think through. So that's what the Mind of a Trader is. It is a marketing Like what's a clever way to describe it? I have it like before the bell closes. Like,
wouldn't it be at the mark with
musings of
Mark?
Yeah, I don't know.
It's not
Closing the market with Mark.
it's not the open, it's not the close, so it's not the limit, or it's not the bid or the ask, it's the mark, right? It's in the middle. So mark the market with Mark is my vote.
at the close,
market. Yeah.
mark to market with your sixth favorite coach out of six at Tackle Trading.
All right, we got about 15 minutes here. I want to flash fire through a bunch of stuff here as we can. I love the analysis. By the way, just join with Mark, and you can find the Mind of a Trader show on the website. If you're already a pro member, you know how to find it. If you don't, buzz an email to Mark, team at Tackle Trading, before the show starts. He can send you the link and get you set up with a trial and whatnot. Make sure that you can come and attend that here in a little bit. Oil, Russia and Saudi Arabia agreed to reduce, and this is what I heard from the news that I read, by about 20 million barrels a day, Mark. The volatility in this oil price here today is incredible, though, because that's not confirmed. We don't know it for sure, but that was what I read in the news headline. What do you know from this OPEC Plus meeting? What have you been reading? What have you been seeing?
Well, I mean, it's been part of my bullish oil thesis, right? That they have to cut production at some point. It doesn't matter what they want to do. I mean, this has been part of my oil bullish thesis for a month now. It does not matter what they want to do. The capacity issue, the demand shock issue is going to force the parties. They literally are not going to have anywhere to put the oil if they don't do drastic cuts. Now, this doesn't mean that there's not potentially downward movement in price, but it does mean that in this longer term picture, in my opinion, that at some point you have to have stabilization, because there's literally no other option. Doesn't matter how stubborn they want to be. Doesn't matter. Now, that doesn't mean oil won't go lower. I pray it goes lower. Oh my gosh, I pray it goes lower. But what it does mean is that they are signaling that they recognize the issue, that they're willing to act upon the issue. And yes, and the market's not robust because, once again, they're hemming and hawing about it, right? They're like, well, we'll do some cuts, but it's only going to be for, I mean, they don't, I mean, they still, I mean, they're trying to balance this, because, I mean, Saudi Arabia and Russia oil is a huge percentage of their economy. Like, just massive. It provides the entire infrastructure for their economy, essentially. And so, like, you know, there's this reluctance to go too deep because they're trying to juggle the numbers, right? Well, what does this mean? Doesn't matter. The capacity issue will force their hands. So I'm really excited, because now that they've signaled, doesn't mean that there can't be downward pressure, because this is a nightmare situation for short-term prices on oil. But it does signal that one little step has been taken in this overall bullish thesis that I have. You know, Tim, at the end of the day, the Saudi princes are going to have your back.
And I did win that bet, by the way. So market.
Well, first of all, we don't have agreement on any of this yet.
I think I won the bet.
It is decided, victory to Tim.
The volatility here is pretty incredible. I mean, oil volatility has been crazy for a month here, Frank. On that chart, you see the initial burst out early in the morning, actually overnight here when we were sleeping, took off, ran all the way up to 28.50. Now you're down sitting here near support. Cody, back out to like an hourly if you can. Frank, what are you seeing just from a chart perspective? And also remember, we're heading into the weekend. As a day trader, would you even take any signal at this point of the day?
Probably not. I mean, in theory, would I? Yes, but not in reality. I mean, it's got a nice little floor break and a nice little empty pocket right there, right? And when we're looking at that 5, we were testing a pretty good level of support. We just don't have a lot of time left, would be the primary argument against that. I actually think that, you know, it's almost, and this might be pushing it a little bit, but I think you could start to maybe look at that floor. If that floor breaks, you know, there's not a lot to that next support level in the 200 hourly. If that floor holds, no real reason not to take another run up towards that 28 resistance zone. And either of those breaks, I think you could make an argument would be legitimate signals. I think a break above resistance, again, more from a trading point of view, would be a bullish signal. A break below that 200 hourly and that little double floor that we put in would be a legitimate sell point as well. Not really great, but there is that 5-minute floor that's developed, and I would call it a break if it were to break that, but probably, I don't really, you know me, Tim, I don't really love setting up trades, the second half of the end of the week. Yeah, it's just not my style. I'd rather just hang out and talk to you guys and things like that. So
yeah, last trading day of the week, obviously a lot of day traders or even short-term traders, they end up kind of putting the brakes on a little bit, do more planning for their longer term stuff, which, by the way, Mark, I think is why it's such a great time for you to do that mind of a trader, thinking about planning for the future as you're closing out a week. Really, really great idea. Mark, oil here, the price action doesn't mean much to you in the short term, does it? Because your thesis is more about
only
long term.
only on like the specific timing of things. I was talking to Frank.
yeah, we had an interesting conversation about that.
Because Frank, you generally buy whatever my stock market thesis is. You buy my oil thesis 100%.
Yeah, I'm
right?
with you on the oil. Yeah, I'm
Yeah,
100%
and so
there.
price movement, it just becomes the only thing that matters to me is maximizing my entry.
How are you gonna do it? Yeah, exactly. How do you want to play it?
So like if things are pointing and there's some short-term bearish signals, maybe I'm not so apt to sell a naked put until it goes a little bit lower. And we saw this on the price action this week, that if I'm going to sell a naked put, what was the ideal point to do that? Or if I was going to enter into USO, I mean, when it was bouncing off that support level, right? When we had multiple levels of confirmation. But the technicals right now point to short-term downward movement. And so like, that's the only reason I'm using it to time my naked puts, but once again, if you don't want to time it, I'm so on board with my oil thesis that, and once again, it's a long-term.
Yeah, you just have to be willing to deal with some downside.
Well, you have to understand assignment cost too. I mean, I think that the
Mhm.
biggest concern I have with it, Mark, is not necessarily the thesis. I actually think the thesis makes a lot of sense. It's very good. It's just people need to know how much they're willing to actually pay to get into that ownership position if they do take assignment.
Yeah, and this thesis is not on crude oil futures. This is on USO. Because crude oil futures are experiencing contango right now. To have to roll into those future months on the futures contract, you're already having to pay a higher price.
Yeah.
Because the future market is saying, yeah, you're going to have higher oil in the future.
Contango. I love that word for so many reasons. It makes me think of like an old Western horse, Frank. Like
I could see that. I could see that.
Contango and drag. What is contango, Mark? Real quick for everybody out
well,
there.
It's just like sometimes futures markets get mispriced, and so basically, the oil markets expect those future things. If I were to take delivery in future months down the road, I have to pay higher prices than the front month contract. And pretty significant actually, because the future market recognizes all this too. They're like, yeah, like things are going to stabilize. And so this strategy is only for USO, and please USO go down in price. I want to get.
You like it cheaper. You want it down. You want it cheaper for sure. Let's flash fire through a couple other markets here, Cody, if you can. Gold, Frank. Here's breakout, Frank, today as well.
Popping. I heard Noah yesterday bring it up. Broke out. Was sitting there on that little doji yesterday, and fired up here today. What a pretty candle that is.
What a run for gold. I mean, 4% here today. Gold has definitely been one of those instruments that a lot of people have had thesis around for a long time. Mark, it's just not your style to add to higher levels.
And I was very on it. Like one of the preferred plays I had this weekend for pro members this past weekend was naked puts on GLD. And I totally went full disclaimer on this. I was like, because we all believe in the fundamentals. The fundamentals of gold. We've been on tackle trading for 15 straight months now. Higher prices very likely can be expected. I just will not deviate from the way I do things as far as cost basis being the top priority. I won't deviate or alter that for very much. And so like naked puts at lower levels was one of the plays this weekend. But once again, those naked puts are going to expire worthless, most likely, and could close out at higher prices today. So gold's been the most frustrating thing, because every naked put recommendation, right, keeps expiring worthless. So once again, winning trade. and yet you have this like massive fundamental like argument for gold, massive, like just so.
I mean, I like naked put if you don't own it yet, for sure. But if you're long equity, Frank, you got to be happy here with this breakout. I mean,
Oh, absolutely.
yeah, there's no doubt.
Yeah,
It's been a runner. I don't even I can't even imagine having an upside target for gold.
Yeah, and that's the frustrating thing, right?
Yeah, it's an investment, and you can look, whatever your signals are, that's how you get in, to whatever it is. But yeah, I'm with Matt 100% and you guys that there's better. I mean, silver was an easier trade. Silver broke 15, held 14, broke 15K trade style, not a whole lot until knocking on the door of 16. A lot of easier things to trade than gold. And that's been true for quite some time now. It's not always true, but it definitely has been true for a while.
On this silver, if you were trading it purely as a trader, you might be close to a profit-taking zone there.
Yeah, I think you need to respect where we're pushing on silver at this point in time. Not to say that I'd be bearish, but that was an old floor. That's the 50-day moving average, a round number. Really great move off of that 14. I remember I was listening to you guys do the halftime report last week, and I was sitting there watching that floor. I was at the two screens. I don't know which one was more entertaining, the battle at 14 on silver or you guys in the halftime report. I'll give it to you guys, but I might not mean it.
Yeah, no, that was absolutely a beautiful battle for technicians, and 14 did hold, and then it did run and pivot and started moved higher. There's no question.
No, let me get you guys' thoughts, because on the weekend too, I was a big proponent of silver. Naked put style once again, because cost base is the most important to me. Or as Frank says, make some money, worry about making more money later. And so now that it's broken out, going to like SLV, which is a lot easier entry vehicle. What levels would you feel comfortable owning silver from now till 10 years from now? Like, what are the price levels?
Physical or here as a paper part of a long-term investment portfolio?
Oh,
Because they are different.
You so believe the world is going to explode.
I know where I'm going if it does. I know whose house. Not Mark. I'm not visiting Mark. I'm visiting Tim.
Yeah, Tim has the physicals. I'm going to so raid your house.
What you could do is you could mix both of your philosophies and do what Matt taught in the personal gold system. You can sell and cash flow off of the paper asset to buy the physical, to where you're using the market to basically give you free gold and silver.
Yeah,
you could use both strategies on that, to where you could, every time you sell a naked put and it expires worthless, you take that money and you go buy physical.
Like the Timmy the Bear t-shirt I'm going to make is literally going to be with a nuclear cloud in the background. With bears eating people. Like I'm going to get a graphic artist to design.
It'll be like the characters off of South Park, the woodland creatures.
Oh yeah, futures here.
That's a good call.
I mean, we're on SLV at $14. If you go to the SI, the actual futures contract, we're talking about $16 here, Mark. I mean, you still have an industrial metal that has international economic realities to it as well. And I probably would not initiate new investments just blindly here. Now, physical silver, again, Timmy the Bear, I get it. Owning that, I'm owning it for a different reason. It's not necessarily
what naked puts on SLV
trade.
What naked?
Give me the bottom. Give me 12. Give me 12 on the futures. On SLV, it's going to be closer probably.
You got to go to SLV. These are the futures.
Yeah.
Go to SLV. Because this is one of the things that I want, 10, once 11, again, at 12. The end, you're not getting it. Like, what time frame? Go to, because this is one of the actual decisions I'm making heading into the week, right? Like, it's like, what about what about 12?
How far out do you guys want to go? Because going 36 days out at 12.
Yeah, I mean, you get $13 there. I would rather go out to 60 days and get more premium at 11 and still be down at 11. If it's based on the thesis of what you're talking about, Mark, I don't need the cash flow this month, right? So I need the strike where I'm comfortable more than just the money from the cash flow, in my personal opinion. When you're boomeranging, you should not up your levels beyond where you're comfortable buying. Would you agree with that?
All right, done.
Okay.
Because, I mean, here's my silver argument. Yes. Okay. So the downside in equities, all of the Timmy the Bear arguments, grant them, which means you could have on the industrial side of silver, a pullback. So if you're going to get put something with the Timmy the Bear thesis. I would rather have something with the precious metals upside in the monetary environment we have, all things being equal, versus 100 shares of a stock.
Mm-hmm.
What do you think about that?
I think that's fair.
That's fair. Yeah.
You know, and so I'm willing to up the percentage of my portfolio in silver, realizing that there's some downside potential, because 100 shares of equity, all things being equal, doesn't have the monetary upside, the precious metals upside. So industrial downside potential is there, but equities don't have the other, like what the Fed's doing, right? You know, what, Timmy, the whole system's going to collapse and we're all going to be eating each other and Bitcoin's going to rule.
Well, that's a little extreme. I'm not calling for the zombie apocalypse. I'm calling for, in fact, so let's table that for just a minute. Guys, I mean, we're at the back end of our show here. There's a bunch of stuff I did want to get to. We can kind of punt on this a little bit, Mark. We're going to have to. Why don't you continue this conversation in that mind of a trader? Real quickly on the charts, though, Cody, there's several news stories I do have to get to. Give me the dollar real quick. Just be aware, if you're a small business owner, a county commissioner, or if you are across the country, the Fed has now opened their doors to you. It might be the biggest story of the day. It might be the biggest Fed action they've ever taken, Frank. They've never done this before.
It's a big one.
$2.3 trillion where they're going to open it up, Mark, to small businesses, to lending to counties and states and communities and cities. You should read Jerome Powell's speech. I'm sure you already have, Mark. He basically said, we're going to do anything we have to do.
Yep. Well, I mean, that's been the bullish thesis, right? That's what.
Yeah. Fed comes back.
If you needed confirmation, you got it. But
yeah, absolutely, you've got it from the Fed. There's no question about it. Outside of that, Disney. Give me DIS here real quick if you can. Disney announced they have 50 million subs, which makes sense. Everybody's subscription. They were thinking they weren't going to get to like 60 to 90 million subs until like 2023, Frank. Obviously way ahead of schedule here. Does this get you interested in Disney, Frank?
No, I mean, while that is a positive, you also aren't getting that sweet, sweet money from the movie theaters, from the parks. So no, I'm off the Disney Express right now, personally.
Mm-hmm.
Yeah,
Mm-hmm.
and that's something, Frank, that I was thinking about, is when they're taking their movies and moving them straight, they're not going to theaters right now because obviously theaters are closed, and they're just going straight to Disney Plus like they did with the Pixar movie Onward. Then they're missing out on all that upside of what they would have made in the theaters when people are paying $20 a movie ticket.
Right. Mm-hmm. Yeah, I mean that might be
unless
a great
they started
model
doing like a pay-per-view type subscription, but I don't think people would like that as much. If you get a subscription just to watch the normal stuff, and then there's fancy stuff within that you have to pay again for.
Dude, if you give me the new Avengers though, I pay $20 for my whole family to sit there and watch it at home. Like, let's say that they go.
Yeah, I mean, I think that could be something that could definitely be interesting. I think it takes some getting used to. Mm-hmm. You know, I mean, I'd like it personally.
Maybe start it as just, you know, like kind of like a Redbox, like $1, $2. Yeah. Hey, here's our newest movie, $2, rent it right now.
Yeah.
Yeah, but then you can't jump it back up to 20 because you've spoiled me. You know, you start at 20 and then you knock it to 18.
Yeah, and Netflix I think started at $5 a month.
Yeah, I will say this though on the chart though, if you're just looking at the chart, a little higher pivot low there, Frank.
You know, much like many things in the market. Mm-hmm. I mean, from a pure technical, I mean, how many times we saw this in the broad market? We've seen it on silver. I mean, this pattern creating that higher low, that failed retracement, break that resistance. I mean, that has been a bullish signal for a long, long time. You know, one of my favorite reversal signals personally for a very long time. And so, yeah, I mean, a break above resistance, I would call it a bullish signal. How, you know, what I would do with it, I would do nothing, but I would call it a bullish signal if it broke that resistance.
I want Mark's opinion, because Mark had been saying how he wanted his Disney shares back for almost a full year. Mark, did you get your Disney shares back or no? Because you were saying, man, I wish Disney would go back below 100 so I can get them back. It went back below 100, went all the way down to 80.
No, I do not own any Disney right now. Call me old-fashioned. When nobody can go to movies, nobody can go to parks, nobody can go to sporting events, ESPN revenue. Call me old-fashioned, but I want to
Mark
see
the Bear.
I'm here. Well, no, it's just ridiculous. like Disney. Once again, I'm willing to do certain actions based on the Fed. All of that. That doesn't mean the Fed's actions will make certain companies thrive. I think
Yeah.
that's a nonsensical argument. I don't have time to go into it because we're at the close of the show.
Yeah.
But companies that to thrive, you need true economic stability.
And that's what I'm saying about the broad market and these theses is you still have to take it to the next level and identify areas that you're willing to do the things you're talking about, which I think is what you've been talking about in all your weekend programming for a very long time. I got to step on the gas here for a second here. Starbucks down based on what you just said, Mark. Here's a good example. It was down overnight. It actually is rallying here with the market a little bit, but they warned on a lot of their stores. Same store sales were down. Traffic was down. They pulled their guidance, I believe, which is not good for a company like this. Who knows if these dividends are going to stay in place for these companies, Mark, that are consumer sensitive. We'll wait and see. Pfizer, PFE here, a lot of interesting reports out of the medical industry. They were up after a report that they identified a virus drug candidate. I also read from Mylan, MYL as well. They're producing massive amounts of how do you say it, Cody?
Hydroxychloroquine.
Hydroxychloroquine. Yeah, that's right. Which is that malaria drug, Frank, there's some anecdotal evidence it might be helping some of these patients. And then Medtronic.
Give me real quick. Give me a trade. Give me options. What are the $14 options trading at
On MYL?
On the Maze?
Go back to May.
May.
Mm-hmm.
$14.
Can't get 15, 12.50 though. 35 probably.
I mean, because the one thing about pharmaceuticals, if you're looking for safer cash flow plays, I mean, there's some appeal in Pfizer. There's some appeal in some of these companies. So,
yeah, I agree. There are candidates I'm interested in out there. Medtronic, one last one here for me here from a chart perspective.
What's Medtronic?
MDT.
Frank, and these are the kind of things that actually give me the hope and things I want to see. I want to see some evidence that they're going to have a medical response to this thing. And as soon as I start to see that, I can start to see the economic recovery. I'll go from Timmy the Bear to Timmy the Cautious Bull. But I'm not there yet. There's no question. Not even close to there yet, by the way. But Medtronic did announce they are making this Puritan Bennett 560 ventilator, and they're going to start shipping them out next month, which is going to start helping some of this hospital relief and whatnot. Frank, what's on your eyes? What are you seeing out there? What's on your mind?
You know, I think Tyler said it best last night in his webinar. It's so much easier to just trade the market than individual companies because, I mean, pretty much. It's not everything's up this week, obviously, but throw a dart, you probably are up, right? And we're in what I just. I'm a simple dude. I call it an all or nothing market. Everything's always doing the same thing. I think, and I've continued, for the last, since really this began from a trading point of view, really to focus on the S&P. I think that's the best vehicle to be working with. I think I'm getting, taking part, able to participate on both sides perfectly fine. Again, this is the trader hat, not the investor hat. I'm not there on the investor side of things personally. I do like, I am with Mark on crude and on oil and USO, but from an equities point of view, this isn't what I want for my signal for my investments. I'm much, and if it is, I got to wait for a pullback. I'm not buying them here on a Thursday going into a long
Timing
weekend.
is everything, right?
So
yeah.
So I'm continuing to work on the broad market as a whole. I really do believe that's a great place to be, but the metals have been really nice. Silver has been a little more tradable. Gold's always tough to trade. So I've been kind of focusing on the bigs. One interesting thing today is the biggest movers are gold, they are silver, they're real estate, and they're utilities. I mean, real estate and utilities both up very nice today, outpacing the market. Strong movement over in those REITs and those utility companies. Interesting that they are outpacing the market today.
Last thought here. We got to go back to crude oil intraday chart. You guys got to see this. Broke down. We identified the breakdown. We talked about it a minute ago. It broke down. It backfilled. This is a perfect on like a little tiny 1 minute, 2 minute, 5 minute chart. If you're looking for a breakdown here, Mark, it is now breaking down. You might get
and that's the thing about the timing and the naked puts that we were talking about, right? Like you don't. And this is my problem with if you're a long-term investor out there. Learning technical analysis over the course of an investing lifetime, even if you're not an active, let's say you have zero interest in day trading, zero interest in swing trading, you are just a investor. Knowing technical analysis can help you fine tune the percentage of money you make at the end of a year. It can still be a valuable skill set, even if you have zero desire to trade. Just understanding technical analysis to help fine tune those decision points.
Sure.
And like when things are looking bearish in the short term, why would I sell a naked put that moment, knowing that downward pressure could happen? I can make a couple extra bucks, right, by doing the same naked put after it tanks a little bit.
Yeah. Couple quick things, guys. If you're a pro member, join Mark on the website. In fact, Cody, can you go to the website real quick so people know how to find this link? Do a little communication here. This is kind of a last minute decision we made to launch this. And we do a lot of things last minute these days, Frank, because the markets have been so crazy. We launched that webinar last night with Tyler. Did you get a chance to see that, Frank?
I did. Yeah, I joined live. It was awesome.
Yeah, I thought it was great too. Highlight where it says shows, Cody, and just Mind of a Trader right there. All you got to do is go to shows and Mind of a Trader on tackletrading.com. You can enter the webinar if you're a pro member, right?
If you go to the calendar right to the side there,
Mm-hmm.
you can see that there too.
That yellow button was just above you there, Cody, and right there on the side as well. And if you're not a pro member yet, great time to sign up for a trial. We're going to be putting out our weekend reports here, or I believe probably tomorrow or Saturday. We've got a long 3-day weekend. And guys, do some good out there. If there's any way we can ever help you, let us know. Hit us up on Twitter at Tackled Trading. Frank, you do an awesome job running that Twitter account. Appreciate you as always, sir.
Thanks. Happy to do it. Happy to do it. You can also, of course, find me at Frank Martin 23 if you're ever looking for me. That's where to find me. And just one note, it's earnings season. Next week we're kicking off. We've got the financials. You got JP, you got Citigroup, BlackRock, Goldman, Wells Fargo. So do make sure you are on top of that earnings calendar.
Absolutely.
Talk me. All right, you're not going to be there in the mind of a trader today, but these are the kind of things I'm going to be asked. Talk me out of selling a naked put on Bank of America.
Ooh.
Bank of America is a hard one because I do believe, I even saw a report here today, Mark. There's a Wall Street firm that was pitching how much money they're going to make from these Fed programs to investors, saying, hey, if you put your capital with us, we're going to be using these programs, turn it into all these returns and all this kind of stuff.
Mark, talk you out of selling a naked put? Earnings coming up.
I don't give it.
He don't care. This is more of a multi-year plan about owning.
Okay, first of all, earnings are all priced in, Cody. It doesn't matter how bad they are.
It's all priced in.
It's all priced in.
I ain't talking you out of it, Mark. And even if I tried to, by the way, I'm just Timmy the Bear. You're just looking for the counterpoint. If I tell you to do it, you're probably more likely to not do it.
Probably.
Yeah, you'd be like, oh, I really like that trade. Mark would be like, oh,
listen, this is what I would.
What's wrong with this trade?
Cody hits it though. I mean, let's just do the, play it out. You sell the naked put, nothing happens on earnings. Good for you. I made a couple bucks. You sell the naked put, earnings do gap down. I'm not saying I have an opinion one way or another. And you could have sold a naked put lower and got a better deal. And you're not getting that much money to do the one going into earnings. I'll always maintain setting up something pre-earnings is not worth the risk. The risk of you getting it cheaper, or the upside of getting it cheaper, outweighs the downside of not, in my personal opinion. So I would not sell a naked put on anything going into earnings. But that's just me, and that's just my rules.
Well, and even if you did want to take a gamble on Bank of America earnings, I don't think they're the first bank to report earnings. Why couldn't you wait till some of the other banks come out? See what happens with the early banks early.
Go do a Geno Fly. Do a Geno Fly. Get some action that way.
There you go. All right,
you
guys. Mark, you can break that down later in your show. We got to wrap this one up.
Yeah, 35 minutes. Mind of a Trader for pro members. Come join us.
Yep, 12:30 Eastern.
Thanks for having me, guys. Thank you, Halftime Crew. Always a pleasure. And everybody have a safe and enjoyable 3-day weekend.
Have a great weekend, guys. We'll see you.